Welcome back to the channel. My name is Brad and today is sweet tea time. Today is really going to be sweet tea. Last week I had coffee, but this week it's sweet tea again. And this is going to be a longer episode because there was a complaint that was too short last week. But I have lots of information this week, especially since we had a little correction yesterday or Friday. Not a big deal, just a little drop. It's all part of the game. Let's talk about this though. Are you scared? Fear and greed index. Everybody is fearful again. At least in the stock market. But on crypto, hey, they're neutral still. That is interesting. Crypto people are a little less fearful than the stock market people. But that is all about what you believe in. And that goes into a different story. And I'm going to take a quick break from just going through charts and everything and give you something to think about. Nugget number one to think about. Have you ever thought about what happens when you pass away? I mean, Brad has, I'm not going to say a complicated portfolio, but will your spouse be able to pick it up and run with it? Have you had a transition period of telling them what they could do and what they couldn't do? I mean, that is something that you probably want to think about. And I'm going to just go ahead and give you a little bit of nugget, another little nugget. My significant other has her Series 7, so that makes her a stockbroker. That's why I pick on these people so much. It's literally, I'm married to one of them. All right, so she does not have her Series 63 or a Series 65, but she can legally do transactions on your behalf. Probably not the person you want doing the transactions on your behalf, but hey, she can do it. She passed the test, and that's all I need to say about that. So those out there that have their Series 63 and 65 and Series 7, kudos to you. But so does my wife. I'm just going to throw it out for general conversation. Now, she did that when she was younger. Then she went into teaching, and that was a great career for her compared to being a stockbroker. Just thought I'd throw it all out for conversations and throw it out. And that gets into that transition of power. I know that she'll be just fine taking over my portfolio and managing it later on. Do have to do a little bit of coaching for her to tell her what to look out for, but hey, she listens to my videos. Anyway, I got an email today. I got an email from YieldMax. And they say YieldMax is doing better than YieldMag and better than FEPI and better than QDTE and better than XDTE. At least that's what they said. Hey, I don't know. I don't sit there on a day-to-day basis and look at every single chart under the sun just because everybody thinks that I do. I mean, literally they do. I mean, there's like, I don't know, 6,000 income funds between closed-end funds and ETFs and ETF generation and income, and everybody, what about this fund and what about that fund and this fund over here and that fund over there? I mean, it's like a daily pinball. I bring up the first graph and it looks pretty close to their numbers. Yes, pretty close to their numbers. And that is totally with distributions reinvested. Yes, I do not have a Bloomberg terminal, but I have something very close. And by the way, it's free. And no, I'm not going to tell you because you need to do your own due diligence and find out for yourself. Come on. Why doesn't somebody tell me where to go find it instead of them asking me where I get all my stuff from? Do a little research. It only takes one Google search. Actually, DeepSeek. Like, can I get a chart and what website? And you might get the answer. Yeah, 30 seconds on DeepSeek, you can get your own charts. But looking at that chart, I see that is fairly true. Fairly true. I'm going to say YMAX and YMAG on a 6-month chart is doing better than FEPI, XDTE, and QDTE. And I keep on telling people I don't invest in funds that have synthetics, because synthetics have a natural depreciation just because of how it's actually mechanical, and it's nothing to do, they're not doing anything wrong, because obviously they're doing better in total returns. My comment on this whole subject matter is I have four funds. Four out of my funds, I know I'm going to have NAV decay on my cover calls. I know that I'm going to have NAV decay on my cover calls. Just the way that it is. They're mechanically set up that way that they're going to have NAV decay. I don't need every single one of my cover calls to have NAV decay. I'm just going to throw it out because I'm going to bring up the next chart. Yes, every single one of these funds is down in their NAV. So there you go. Do you want down NAV, up NAV, total returns? I have to have a mix, and I can't afford to have every single fund have NAV decay, even though they do pretty good on total returns. Just throw it out. You're going to be treading water for the rest of your life if you keep on trying to do this. And that is why I invest the way that I do. I have some funds that I know that I want to have NAV decay, and I have some funds that I know that I'm not going to have NAV decay. But people keep on arguing there's no NAV decay. I don't know what they're talking about, because I can look at the chart and say, what are you talking about? Just as a relative conversation. Now, moving on. Let's move on from that conversation, because that just wears me out. It does. Really wears me out. Am I afraid of the market? Am I worried about the market? And I've brought this up more times than anything else. M2, M3 money supply. Let's look at it. M2 money supply still going up. There you have it. It's a done deal. We shouldn't even be talking about it. You can see where the last correction happened of 20%. Literally, you see the M2 money supply happens going down exactly when the market went down. And you see the M2 money supply literally going up as the market is going up. I just gotta get tired of talking about that some days. But wait a second. I'm going to say, wait a second. So the M2 money supply, when you go out to the St. Louis Fed website, oh, well, that's a smoothed curve. But you can go find it on a weekly basis. And the next weekly print isn't going to be to the end of this week, but you can see on a weekly basis, you can actually see it starting to slow down. And that's probably why, hey, we're up against the ceiling. And don't think that the market's going to go higher any time sooner until we start seeing more global or M2 money supply. That, I mean, it's hand in hand. And if you don't think it's hand in hand, I'm sorry. I guess get tired of it. But here's another one. The next one is velocity of M2 money supply. I don't really talk about that. And velocity of M2 money supply is turning negative. That's a slight concern, something we need to keep our eyes out on. Is it going to go totally negative? Probably not, but M2 money supply really does matter. And the last one I want to just throw out, I'm just scrolling through here, and sorry for the breaks. I am looking at the M2 money stock, and you can see that that is ticking up, but it's gone flat. So that is the M2 money supply. M2 money supply matters. More money gets pushed in, all boats rise. That's how it works. But what we're seeing is a slowing in velocity of the M2 money supply, which means we're going to start bumping our heads up against all-time highs and not breaking through. So take this correction as a small correction, but it's just a correction. This is not a fundamental shift to the M2 money supply that we saw before. And as soon as we see a fundamental shift to the M2 money supply, that brings up a totally different story. It does. And you have countries like Canada that has gone into quantitative easing. We have not in the United States, but Canada has. So their money supply is going to increase. The other portion is we now have the most money sitting on the sidelines ever. So there you have it. Do we see a 5% correction? 10% correction? Yeah, probably. Could be. Very easily. But do we see a 20, 30%? Not until the M2 money supply tells you that you're going to have it. There you have it. We're not having it right now. We are seeing a flattening out. But the M2 money supply continues to go up and to the right. And when it went down to the right, that's when we saw a 20% correction. Just to make sure that you recognize the two differences of the charts. Let's get into the fun, exciting stuff of the day. Yes, and did you drink your sweet tea yet? Because I am going to take a quick sweet tea break, and we'll be right back to talk about charts. Now that I'm back, let's throw out some charts here. Let's get into it. So, economy in the United States by state. The economy in America is $29 trillion. And you break it down by state, you see California at 4.1, Texas at 2.7, New York at 2.3. But then you look at European Union GDP at 19.4, and Germany at 4.7, France at 3.2. Yeah, look at that. California has a bigger economy than France. There you go. Texas is bigger than Italy. Yeah, just a general conversation. Scroll down a little bit farther and look at some more states or countries or whatever they call this. Yeah, and by the way, if we just take over Canada, we can grow that GDP just because we'll just suck in Canada too, right? Make that 51st state. That's if they can stop fighting at hockey games. Yes, throw it out for conversation. If you didn't watch it, where Canada and the United States played against each other and there was a fight at the national anthem. They didn't even get to play yet. Yeah, another day. So Asia's $40 trillion. Wow, that's a big one. Then you have China at 18.3 trillion, Japan at 4.1. So here we are. We're going to have California and Japan tied. But California is bigger than India. There you have it. You have the information that you need to know where the biggest countries are. That's another conversation. We talk about world leaders, and I see that Putin has been in charge for 25 years. Wow, that's a long time. And I'm just looking at these people going, yeah, you've been in office or in power way too long. 50 years? Come on. Come on, you have outlived your prime if you've been in office for 50 years. I mean, we just went through that with the last guy. We're just going to throw that out for general conversation. But anyway, we're going to look at population. Because population is growing in certain places. And we see that China really peaked in 2021. And India is going to continue to go up. Ah, that's interesting. Interesting indeed. And the United States is going on the wrong direction in population. But that's okay. We're just going to have open borders and let everybody in. No, we're not. We're going to stop that. Put that down. I did see a chart about Great Britain and their population problem. And you think that we have immigration problem. Europe is far worse than we are right now. And that's a different conversation for a different time. But what I saw last week or so is I saw Trump, that other guy, Mr. Tan Man, having a prime minister of India. And I look at that going, that's very interesting. India. We have a trade imbalance. Yes, but exports and imports just aren't quite the same, and that is something that needs to be corrected. We need to have equal trade just across the board to everybody. We should not be taking everything from everybody else unless they're taking some stuff from us. That's just how it goes. That's what's called fair and equal trade. I don't know why that's such a hard conversation, but it is a hard conversation. Right? The other one is U.S. direct investment and dominance of offshore financial centers. I think that's interesting also, because I see United Kingdom. Well, that's a pretty big area. Netherlands, that's kind of small. Luxembourg, okay, right. Well, let's face this. Luxembourg is like, this little bitty little dot. All right. I mean, I used to drive through the town of Luxembourg or the city of Luxembourg in 15 minutes, come in one side and out the other side when I was going to Belgium. So it is very small. Trust me. Trust me, I've been there, done that on many of a weekend. And my car even broke down in Luxembourg, and I had to spend the weekend in Luxembourg. Just a different whole story for a different time. It's a great place to visit if you haven't visited. And then you have Ireland, the rest of Europe. You can see how this has grown over time. Well, let's bring some back of that direct investment abroad back to the United States, and maybe we'll grow the United States again. Just throw it out for general conversation. No hate comments down below, because I know there's going to be somebody that's going to not like that conversation. But nationality of NFH hockey players. I see the United States, I see Canada, that's two great places. Then you have the rest of them, Sweden, Russia, Finland, all right? So, hey, we need to get along at hockey games. I know it's a fighting sport. Just keep it down a little more civil, especially when you're having the national anthems. And you should be respectful of all the national anthems across the board. If it's Canada or United States or one of these other countries, you really should be respectful to those people, because they're people just like you. Don't think that you're better than them, and that's where we get into this whole problem. Now we're going to look at average wage. I look at this going, that's interesting. US is 80K, Canada, well, maybe we don't want Canada because their average wage is less than the United States. Mexico, 21K, that's pretty low. But I look at some of these other countries and I say, wow, maybe I need to go live someplace else where it's cheaper to live. Because obviously it has to be cheaper to live if their citizens aren't making the same amount of money. SPY is no longer the world's largest ETF. I saw this the other day. VU has caught up. Interesting. But if you're trading options, you're going to trade options on SPY. But VU right now is the biggest one. And this gets into another whole conversation. We're just going to throw this out for those people that keep on boo-hooing on me about synthetics. You notice that SPY went down, right? When SPY went down, did they have to pay you the gains? Oh, no, they didn't. When the synthetics goes down and go up, they have to pay you the gains when they sell, like the poor man cover calls. I'm just going to throw my hands up and go, literally look at the charts, get a little bit better in that education of why doesn't SPY have to pay you the gains, huh? Just an interesting conversation, because obviously they went up and down, and yeah, we're just going to leave it there for those skeptics about synthetics. Publicly traded companies. We look at publicly traded companies, and yes, the United States has a majority of them, followed by China, and then you got the EU, and then you got India, Africa, Japan, all interesting places. I see Canada at 3 trillion. That's pretty good for Canada. I like Canada. 51st state. Just joking to my Canadian friends. And now we're going to look at, since I'm joking about that, I heard the other day, Canada wasn't for sale, but Belgium was, and it was on a discount. I I heard that one. I just couldn't pass that one up. All right, I just could not pass that one up whatsoever. The other one is when I look at largest companies, Apple, Nvidia, all the ones that we know, Berkshire Hathaway, Broadcom, Walmart. Then we get into everybody else's, and I just sit there and go, huh, wow, yeah, Shell, Lindy. I know who Lindy is. AstraZeneca, yeah. SAP, yeah. SAP. Okay, here is my comment on SAP. Stop all production. Yes, that is what the letters for SAP stands for. Stop all production. If you don't believe me, go ahead and implement SAP into your workplace and all production shall stop. Oh my gosh. I mean, it is just, I have worked too many places, too long, and they need to get a better job of integration because it is literally, I've heard that same comment at 3 different companies. Stop all production. Sorry, SAP. Maybe you need to get a little bit better of integrating yourself into larger organizations. Now, we're going to talk about one of these other conversations. And Brad is only joking about this because people get really too sensitive when Brad throws out some sarcasm and they don't get it. And I get it because sometimes I don't get other people's sarcasm. But let's talk about coffee production. Brazil, Vietnam, and all these other places produces all this coffee, and coffee is up. So maybe we don't want Canada as another state. Maybe we want something like Brazil so we can have our coffee. Now, that was sarcasm, and if you didn't get it, that's too bad. That's too bad. The 15 largest countries in the world. I see Russia, I see China, I see Canada, I see the United States. And if you put the United States and Canada together, I can't get past this. I mean, I literally can't get past it. We become the largest country in the world. Sorry, I just literally can't get past that. I mean, it just keeps on coming up, and the charts just keep on showing up, and I just keep on joking about it, but it'll never happen. I don't know if it will or not. Not financial advice or any other advice. It may happen. Who knows? Walmart's net revenue climbs 2024 and net income surges. Income and revenues going up. Man, look at that. Way to go, Walmart. Bentonville, Arkansas. Great place. U.S. semiconductors sales grow. In 2024, semiconductors still going up. So SOXY and SOX and the rest of it. That is something that's always interesting. I just don't follow it close enough. Maybe I can go back to that chart, collect that data, and be able to follow that a little bit closer. But I normally don't get too much into that. If we go to the next one, we're going to go to my favorite subject. Obesity, gyms, and processed food. Okay, you can see gyms per capita, and then you can see the percentage of obesity. Yeah, okay. And that's because the United States has all this ultra processed food consumption. Just throw it out. Maybe processed food isn't the best thing for us. You ever been to the UK? They're starting to look like a lot of big fat Americans. And I'm talking about myself in that whole conversation. So a little less processed food, a little more going to the gym, taking those walks. It's cold outside. I haven't done that recently, and that's something I need to do again. Global trade. Let's talk about global trade. That's always a conversation that keeps on coming up. You can look at 2000 and global trade. United States was dominant. In 2024, we're not dominant. They got to be dominant in this, or we're just going to fall behind. Our dominancy needs to grow. Just throw it out for conversation. It is what it is, right? It really is. But we need that dominance back. We really do. just throw it back out. That's why you can't let this stuff continue to slide and slide and slide, right? And the reason I bring this up is the very next slide right next to it. When we look at Ukraine and what that has cost everybody, it's 0.6 of the U.S. GDP, right? If we had more GDP, they would get more in help. It's all reasonable, right? So when you look at GDP as a percentage, I mean, Denmark is way up there. Right? Germany is close to us. UK is beating us. Canada, way to go, Canada. Beating us on that, right? So when you look at percentage of GDP, maybe France needs to step up a little bit, throwing out where GDP is. And that gets us into the power of the passports. You ever wonder how powerful your passport is? Well, you're not the most powerful passport being a U.S. passport holder. Or Canada. Kind of stink there too. Even though Canada's probably a little bit better than the United States. You want a powerful passport like Singapore, Japan, South Korea, Denmark, Finland, France, Germany, Ireland, Italy, Spain, Australia, Belgium. Belgium made somebody mad. Luxembourg, Netherlands, Norway. And you don't want to be on the other chart where Afghanistan, Syria, Iraq, looks like nobody likes you. Just started throwing out about passports. Interesting conversation. We fall in the middle. So let's talk about cryptocurrencies. Yes, and taxation. I saw an article the other day about taxation and maybe some laws that might be coming from the United States. But right now, we're moderately taxed, but that might change. And it might be a difference between actually trading it and actually spending it for goods and services. Right now, if you spend Bitcoin on goods and services, you have to pay taxes on it. Maybe in the future, you can spend Bitcoin and not have to pay taxes on buying and selling it. Very interesting if you're getting goods and services. But if you're trading, yeah, you probably should pay some taxes on it. The other chart is high record market capitalization, gold and crypto. Yes, it is going up and to the right. Although we see dips and valleys as we go, but we can see that the market cap for gold and crypto are going up. So something that you should always probably have a small portfolio of. I'm not into gold. I'll just throw that out. I've looked at it. Gold, I'm going to pass. So last one is Seeking Alpha. We're going to talk a little bit about Seeking Alpha. Link down below. They're going to have a seminar coming up. Yes, a seminar. Steve in Bavaria from Income Factory will be one of the speakers. If you want to attend, you can get the free trial and attend that conference. Can't get the free trial right now, but maybe in a week, another week, you'll be able to get the free trial and attend the conference. And if you can't attend the conference, sign up for the conference anyway, because then you'll get an email notification when the video of the conference is available. So you can watch it at your leisure at some other time. And I like watching some of this stuff. I usually don't attend the conferences. I usually get the email, so I see the video, so I can play the video back at 1.5 speed, so I have more material that I can get through. That's how I do it. But Bitcoin is right now tracking more closely to the S&P 500 than gold. Interesting conversation there. I think that's interesting that Bitcoin tracks the S&P a whole lot more than gold. So it's a leading indicator if you really didn't get into it. But value and growth stocks was mixed this week, and value takes over. Anytime that you're going to see a big dip, you're always going to see value stocks get higher than growth stocks. It's just how it works. Everybody migrates to safety. And the last thing that we're going to talk about is energy sectors leads the way, followed by healthcare. And you can see how these have changed over the couple weeks, right? You know, utilities. Utilities is another safety one. So you can see how these trade out back and forth. Which sector do you want to be in? And I just threw that out for general conversation and general knowledge that you get these rotations. So my whole thought on the market is M2 money supply is not going down. It's leveling out. So let's not think that we're going to get all new all-time highs. Maybe we're going to go sideways for a while until we start seeing M2 money supply go up. I mean, everybody's fearful of tariffs and what that's actually going to mean across the board because they're all just trying to figure it out. And I am going to say, no reason to put all your money underneath your mattress as of yet. So until next time, God bless.